Oil, daily forecast, February 16th, fxempire.com. The light sweet crude markets rose again during the Wednesday session as the tensions between Israel and the Iranians, as well as the West and the Iranians, continue. The most recent action saw a nice downtrend line that was broken to the upside, but you'll remember that we mentioned that it looked like 102 may come into play, and most certainly 104 to 105 would be resistive. This is essentially what we have found up until this point. The demand just simply isn't there for crude oil, and this much of this move could be attributed probably to the Iranian situation more than anything else. So as such, we see this more or less as a range-bound market still. We just happen to be towards the top of the range. A daily close above 105 has us long of this market, just like a daily close below the 95 level has us selling this market. In between, we expect lots of choppiness and such, and we actually prefer to play outside of the rectangle. But for those of you that are more inclined to trade shorter term trades, you can use these as boundaries because you know that if the 104 to 105 level gives way, then it's just a matter of going long and riding up to what we consider the next target at 115. However, if the recent price action is any indicator, we should run into quite a bit of resistance there and could see a pullback. Nonetheless, though, we're waiting for this choppy consolidation to give way before we commit any fresh capital to this market, barring some kind of obvious sign.